The Malaysian government unveiled a new master plan to increase the country's industrial output to 587.5 billion ringgit. That's about $126.5 billion by 2030, while also increasing employment. Prime Minister Anwar Ibrahim, in his speech at the launch of the plan, said implementation of new Industrial Master Plan 2030 will result in a growth of 2.3% from the previous year. Onward, provide employment for 3.3 million people by 2030. He said the NIMP is designed to drive Malaysia's trajectory as a global leader in industrial development, extend the domestic linkages to create wealth across the nation, as well as strengthen its position in good global value chain. Mr. Ibrahim added that with a limited time window of 2030, Malaysia will seek to accelerate its pace towards digitalization and new technology, moving towards net zero carbon emission and creating an enabling environment that ensures supply chain security.
The NIMP 2030 will also create opportunities for Malaysian SMEs to grow in manufacturing. Our SMEs in the manufacturing sector currently contribute only 8% of GDP and 9% to exports. There's a lot of potential to grow our SMEs in manufacturing in line with our economic Madani aspiration to strengthen firms of all sizes. The NIMP 2030 has, for example, specific action plans to build SMEs' capacities to enable them to be positioned higher in the global value chain. This in turn will help them scale up into mid-tier companies that could help Malaysia earn more foreign exchange earnings.
Asian shares edge higher today as China steps up efforts to support its housing sector and stabilize the yuan, though investors remain cautious ahead of U.S. job data that could make or break the case for further rate hikes. MSCI's broadest index of Asian Pacific shares outside Japan rose 0.18%. Japan's Nikkei was up 0.34%. China's benchmark was up 0.59%, with real estate gauge now earlier gained 0.40%. Hong Kong Hang Seng cash market was closed for the day as Super Typhoon Solar approached southern China, but Hang Seng index rose 0.23%. The European Central Bank says Eurozone inflation remained unchanged at 5.3% in August. The past 13 months, the ECB had consistently raised interest rates in an effort to keep inflation in check. Analysts expect the bank might now consider pausing its policy with the visible slowdown in economic growth. EU statistics agency Eurostat in July 2023 said inflation was almost a percentage point from previous months. The consumer price index for Eurozone was supported by a 9.8% price increase in food, alcohol, tobacco prices in August. Australian Competition and Consumer Commission is asking a court to fine Qantas Air hundreds of millions of dollars a day after suing the carrier for allegedly selling tickets to thousands of customers after flights were cancelled. ACCC said the airline broke consumer law when it sold tickets more than 8,000 flights between May and July 2022 without disclosing they had been cancelled. Qantas said it would examine the allegations and respond in court, but argued that the period in question during the pandemic was a time of unprecedented upheaval across the global airline industry. And crude oil prices were set to snap a 2-week losing streak as they rose for the 4th consecutive session today due to tightening supplies and expectations that the OPEC Plus group of oil producers will extend output cuts to the end of the year. U.S. West Texas Intermediate crude rose to sell at $83.80, an upsurge of 0.20%. Brent experienced an uptick of 0.26% to sell at $87.06. Bonny Light is up 1.62% to sell at $88.35. OPEC basket crude dealers are offering $87.76 with an upward price review of 0.77%.